Hello learner, welcome to Manifested e-learning forum. My name is Emlyn Ngwiri and I'll be taking you through alternative investment analysis block release. Today we are going to look at May 2016, and to start off we will be looking at question 1. Question 1A reads as follows: hedge funds are highly proficient attracting capital prior to the world financial crisis that began in 2007. However, in the recent past, hedge funds have increasingly competed with private equity firms in the purchase of corporate assets in the search for attractive opportunities in which to invest capital. With respect to the above statement, evaluate 5 major differences between typical hedge fund incentive fees and typical private equity fund fees. Now we will begin looking at 16, and this we are looking at alternative investment analysis. Yeah. So question 1A, we are going to look at the differences between private equity fund fees and typical hedge fund fees. So we start by saying that private equity private equity fees are based on assumptions such as, put a semicolon there, we can say such as the investment period, the fund life, or even the holding period, Hedge fund fees, on the other hand, we can say are not based on assumptions. They are based on targets. So please look at the video for private equity investments, where we had actually mentioned about the carried interest, the concept of the carried interest and the management fees, as well as hedge fund, the video on hedge funds. You'll be able to at least try and realize the differences in terms of the fees there. But however, this is what the best summary I can be able to provide for private equity fund fees and the typical hedge fund fees. So that is the first difference. We're still in A. So the second difference is private equity fund fees, are based on a hurdle rate. We provide a description of what the hurdle rate is. That is, we can say a minimum we can say a minimum net return to the investor. Like that. On the other hand, on the flip side, we can say the hedge fund fees. We can say hedge fund fees are based on a high watermark. on a high water mark, which is the amount that the fund must attain before incentive fees are earned. So you can be able to clearly see here it's based on a hurdle rate, and here it is based on watermark, or a concept of watermark, which is the amount that the fund must meet before the hedge fund managers can be able to get some form of return on investment there. The third difference is private equity. Private equity fees are much lower than hedge fund fees, which is based on assets under management. Number four, fourth difference, we can say PE fund fees are not earned until the target has actually been realized. So we say private equity fees, or private equity fees are not earned until the target or predetermined return is achieved. Hedge fund fees are earned on the first shilling of profits. Are earned on the first shilling profits. So the moment you start earning a profit, we are saying that's when the hedge fund fees are expected to be earned. Whereas we are saying the private equity fund fees are not earned until the predetermined target has actually been realized. The fifth difference there, we can say, is that private equity, in terms of regulation, the fees are somewhat regulated as compared to what you're saying the hedge fund fees, because you're saying hedge funds generally are highly unregulated as compared to other asset classes of alternative investments. So we can be able to now, by extension, state that private equity fund fees are somewhat regulated and hedge fund fees are not regulated. So we say that private equity fees are somewhat regulated, whereas hedge fund fees are not. So it depends on the hedge fund manager. The hedge fund manager can decide whichever fees to actually charge for based on the assets under management right there. Private equity fund fees is somewhat regulated. In some form, we can be able to say that the private equity airspace is quite diverse in terms of diversity, in terms of how wide or how big it is. We're saying hedge fund. The hedge fund market is we can be able to say quite substantial, or it's even bigger than compared to the private equity fund airspace there.